In the world of investing, there's an old saying, during a gold rush, sell shovels. The logic is simple: while prospectors dig for gold with uncertain outcomes, those selling the essential tools make consistent profits. This analogy can be applied to the automobile sector and its ancillary companies. If we look at the recent performance of automobile stocks like Maruti, Suzuki and Mahindra, they've seen impressive growth of 53% and 371% over the last 5 years. However, when we turn to companies like UNO Minda, Sona BLW, and particularly KPIT Technologies, which provides crucial tech and components to the auto sector, their stock returns are far higher. For example, KPIT Technologies surged a massive 1,327%, outpacing the automakers they serve. This showcases how companies supplying the tools, in this case, the components, technology, and infrastructure essential for automobile manufacturing, have reaped more rewards than the carmakers themselves. Just like shovel sellers in the gold rush, ancillary companies in the auto industry are capitalizing on the growing demand, highlighting a savvy investment opportunity in industries that support the primary market players. KPIT Technologies has been making significant strides in the automotive technology space. Here's a closer look at its performance. KPIT has shown a strong uptrend since 2021, with steady gains before hitting resistance around 1,900 rupees. Currently trading near its long-term support around 1,375 rupees, the stock looks attractive as it sits close to this support level, indicating solid buying interest on dips. With the stock available at a discount, this level presents a potentially favorable entry point for long-term investors. The company is trading at a price-to-earnings (PE) ratio of 51.9, which is high compared to its sector median. However, given its dominant position in the growing automotive tech space and high earnings growth, this valuation could be justified for growth-oriented investors. Over the past 5 years, KPIT has delivered compounded sales growth of 50% and compounded profit growth of 49%. In the last 3 years, profit growth accelerated to an impressive 61%, showcasing strong operational leverage and profitability. For the quarter ending September 2024, KPIT reported a 23% year-over-year growth in sales, with net profits up by a remarkable 45% to 204 crore rupees. The company's EPS grew by 45%, reflecting its strong earnings power. In summary, KPIT Tech's fundamentals and technicals make it an exciting prospect for growth-focused investors. Sona BLW Precision, Sona Comms, is a key player in the auto components sector, and its performance is notable across several dimensions. Let's break down its key aspects. The technical chart for Sona Comms shows the stock trading within a rising channel since mid-2022. Currently priced around 699 rupees, the stock has faced some volatility but continues to hold within the channel, indicating strength and ongoing investor confidence. The price has respected the lower trendline, suggesting buying pressure at these levels. Sona Comms is trading at a high price-to-earnings (PE) ratio of 75.6, well above the sector median, making it an expensive stock. However, for long-term investors, this valuation can be justified considering its growth potential and dominance in the precision components segment, particularly in electric vehicles (EV). Over the last 5 years, Sona Comms has delivered a 35% compounded sales growth, with profit growth of 24%. The company's focus on precision parts for EVs has driven its growth, with a 3-year profit growth rate accelerating to 32%. In Q2 2024, Sona Comms reported 17% year-over-year sales growth, with EBITDA up by 15% and net profits increasing by 18% to 144 crore rupees. Earnings per share, EPS, rose by 9%, reflecting strong operational performance. Overall, Sona Comms remains a high-growth, high-valuation stock, with strong fundamentals driving its future potential. UNO Minda, a leading player in the auto component space, has shown strong market performance, particularly over the last few years. Let's break down its key aspects. Looking at UNO Minda's technical chart, the stock has been in a consistent uptrend, with a recent correction from its highs of 1,252 rupee to around 933 rupees. Despite the pullback, it's important to note that the stock has maintained its long-term support levels, indicating potential buying opportunities for long-term investors. Currently, UNO Minda is trading at a price-to-earnings (PE) ratio of around 56.6, which is relatively high. However, given the company's dominance in the auto components sector and its positioning for future growth, especially in the electric vehicle (EV) space, such a valuation reflects investor confidence in its long-term growth trajectory. UNO Minda has delivered 23% compounded sales growth over the last 10 years and 30% growth in the last 3 years, with a compounded profit growth rate of 61% in the same period. This demonstrates strong financial performance and operational excellence, especially in the fast-evolving auto sector. While the most recent quarterly results are yet to be declared, investors are keenly awaiting these numbers to see if the company can continue its momentum, especially given its strong historical growth trends and the potential opportunities in EV components. UNO Minda remains a promising stock for those focused on long-term growth. Let's compare all three, KPIT Technologies, Sona BLW, and UNO Minda, based on their technicals, valuations, and growth potential. Starting with KPIT, the stock is currently near its support levels, offering a potential entry point for long-term investors. It's trading at a 29% discount and has shown an impressive 50% profit CAGR over the last 5 years. With valuations below the long-term average, this stock could be a strong long-term buy. Sona BLW is currently trading between its support and resistance levels. It's at a much smaller discount of 9% compared to KPIT but still offers a solid 35% profit CAGR over 5 years. With its valuation near the long-term average, it might be worth considering if it moves closer to its support level. Finally, UNO Minda is also near its support levels but is trading at an above-average valuation. It offers a slightly lower 19% profit CAGR over the last 5 years. Since its valuations are high, investors may want to wait until Q2 results before making any decisions. In summary, KPIT looks like a solid long-term buy. Sona BLW could be a good opportunity if it corrects further, and investors should wait on UNO Minda until earnings are declared.